Welcome to Breaking Banks.
Welcome back to Breaking Banks, the #1 fintech podcast and radio show globally in over 180 countries. Joining me in the hosting chair today is our crypto correspondent and expert, Ajit Tripathi. Ajit, welcome back to the big screen, Breaking Banks.
Thank you so much, Brett. Always a pleasure. And we have some very special guests today. I see that.
Absolutely. How are things going in the crypto world with the whole China ban stuff? Is that of any real impact?
Yeah, the China ban has always been very bullish for me, right? So in the last 5 years, every time we get a ban in China, I tend to buy more. And it's probably one of the most profitable trades in crypto. Now, that's a different story than the US regulatory environment. And we're going to talk about that at some point in this show.
Yeah, for sure. All right, well, let's introduce our guests. We have joining us from Mastercard, Raj Dhamodharan. He's the and if I got that wrong, please feel free to correct me, Raj.
You got it right, Brett.
Okay, he's responsible for managing Mastercard's global strategy, products, and partnerships in the blockchain and digital asset space. He's looked after global partnerships at Mastercard and managing click-to-pay standards. Prior to Mastercard, he spent 14 years in various technology roles, Silicon Valley and elsewhere. Also joining us is Walter Hessert. He's the head of strategy at Paxos. Walter is an entrepreneur, strategist, has a decade of software business under his belt. But at Paxos, as head of strategy, he leads corporate development and growth functions. He's worked on PayPal. He's worked with PayPal, Mastercard, others over this. He also led fundraising efforts for the Paxos' Series C and Series D. Walter Hessert, thank you for joining us today.
Thanks, Brett. Great to be on.
So let's just step back. Obviously, one of the reasons we're talking today is that Paxos and Mastercard have, announced a partnership in respect to crypto. I want to get into that in detail, but maybe if we can just take an overview of how we got here. Obviously, in 2008, the first, the Bitcoin white paper from Satoshi drops. And we have flowed on from there. Now, Bitcoin was not the first cryptocurrency. We could particularly, point back to Second Life and Linden dollars. We could talk about QQ coins in China. There have been other forms of digital or electronic currencies in the past. But what was different about Bitcoin, and now that we're looking at $1 trillion of market cap for the crypto sector, why did Bitcoin in particular take us down this path? Who wants to jump in on that front? Ajit, maybe?
Yeah. So, I mean, Bitcoin is still, sort of the primary example we have of decentralized money. It's still kind of the linchpin of the crypto markets. I think sometimes we don't realize that when things are going well, especially in a bull run. But, the ethos of Bitcoin is kind of what drives the crypto ecosystem. Of course, there has been a lot of innovation in our space. So, and that creates tremendous opportunity for, what we're starting to call Web3 now, which is, how do we go from at the internet where content creators own the platforms, where the content is distributed, which is different from how the internet works today. So we're going towards an internet of value narrative to a Web3 narrative, and that's a terrific story. So even though Bitcoin doesn't address all possible use cases, it's still the primary form of digital money on the internet, in my personal opinion. And so Raj, I think it'd be good to understand where Mastercard stand on bringing digital money or crypto to the masses.
Yeah, what's Mastercard's official position on these alternative currencies, Raj?
Yeah, so so Mastercard has always been about choice. We have always been about providing choice to everyone in the ecosystem. But when we want to provide choice, we want to provide in a frictionless manner. We want to make sure that the consumers, merchants, and everyone experiencing the choice, whether in terms of different types of currencies or different types of ways of moving currencies, whether it's card networks or ACHs or blockchain. We want to deliver that choice, but we want to deliver that in a frictionless manner. So all the innovations that we built into the card network over the years, as well as other networks, is always about delivering the choice in a simple and safe way. And finally, when we are enabling people choice, we also want to make sure that it is safe and secure, right? So we want to make sure that experiences can be trusted, and can be assured that transactions are safe and secure. So if you were to take these foundational principles and apply to crypto, that's what we've been doing, right? We can unpack this a bit more in detail later. So we said, for example, we provide crypto cards today that provides access to crypto wallets. For example, Uphold is a card that we have that provides access to the Bitcoin and ETH and other balances. And this is about delivering choice, but it's also delivering choice in a simple way. You can take that card and go tap and spend your crypto holdings just the way that you would tap and spend your bank balances. It is also about security because you're assured that for the merchants who are accepting this payment, that consumer is a well-known consumer. There is a way for the consumer is KYC'd and provided access to, and you can be sure that the goods and services are delivered to the consumer again. And if there are issues, then you have the entire protection. So that was just a small example of how we think about it. So yeah, the Bitcoin or other crypto, what we call as floating crypto, is accessible through our network in an end-to-end way. That's just one simple example. We can unpack that more later on.
Walter, tell me a bit more about Paxos and where crypto lies at the heart of your business.
So Paxos is building financial market infrastructure. And what that means is infrastructure for financial services, which traditionally is highly regulated. And so we have set out to build a highly regulated platform that can power B2B2B or B2B2C types of solutions for clients like Mastercard. And so an easy way to think about it is Paxos provides the bridge to blockchain for a lot of the largest financial services firms in the world. And what does that mean? That can mean you're accessing blockchain so that your customers can access, buy, hold, and sell natively digital assets like Bitcoin and Ethereum. It could mean accessing the blockchain so that you can take traditional types of assets in other asset classes, whether it be cash or commodities or securities, and re-platform them onto the blockchain or tokenize them onto the blockchain. And our platform is used for that. And then there are some downstream types of benefits once that's done that firms use our platform for. And that's like settlement that is today like payments. And that gets us to the way we're working together with Mastercard, where we are providing highly regulated infrastructure for Mastercard and the Mastercard network that enables the settlement of these digital assets into their ecosystem in a really, really exciting way.
Part of it is from a regulatory perspective, the regulations have been evolving, but will continue to do so. Where do we sort of divide regulation of cryptocurrencies from a market perspective typically? Like we know exchanges are regulated, but what other elements of regulation cross over the operation of cryptocurrency? Raj, did you want to have a shot at that?
Yeah, so Look, I think most of our wallet providers today, at least in US, connect through still a traditional, through a what we call as a BIN sponsor or through banks. That's how they connect in US. We directly also license them in markets. For example, we've licensed WireX in UK directly to be an issuer on our network. And the regulations vary quite widely. In US, I think there is a range of regulations. Most of our I think wallet providers have some kind of money transfer licenses in US. And in other cases, there are e-money licenses in some of the markets. I think it's a wide-ranging thing, Brett. I think it changes quite a bit from player to player. And that's part of the complexity of this, right? So these regulations are evolving. For example, in Europe, there is a proposed legislation called MiCA that puts kind of all of this under a framework. I think it's still working its way through the legislative process there. We generally welcome more clarity in this space so that people know what rules to play by, and we want to bring a compliant set of participants into the network, and we can only do that in a clear and simple way if the rules of the game are well known. I'm sure Walter has comments on this as well, because they operate under a specific framework today, which we found helpful as we work with them.
Yeah, I think that's, everything Raj said is right. And I think maybe most importantly, to answer your question, which Raj was saying, there's how all the different participants in the ecosystem are regulated. Are they an exchange? Are they a wallet? Are they a payments provider? Are they an issuer? Are they a project that is running a protocol? And so there's all of these new and novel aspects of the ecosystem. Some map perfectly to traditional financial services, and some don't as easily. And those all have to be, or open the opportunity to be regulated differently. There is jurisdiction by jurisdiction, and then all of that's done under the umbrella of this is all evolving really quickly. So everything is changing, in time here, and in real time at that. I think that for us, what we're seeing now is a huge shift from early adopter of these crypto and digital assets to mainstream adoption. And I think a great signal for that is everything Raj is doing at Mastercard. That wouldn't be happening if we weren't in this mainstreamification phase of the digital asset space. And I think that in that phase, it becomes really critical that we create a safe, competitive, and transparent ecosystem. And of course, proper regulation and oversight is key to this. And that's been at the heart of Paxos and what we've been building here from the beginning. We have approached the space from the beginning with very much a ask for permission and not for forgiveness type of mentality. And we have sought from day one the highest level of regulatory oversight in the space. So what that's meant for Paxos is it started with a New York trust company. We were the first trust granted by the New York Department of Financial Services in the digital asset space back in 2015. There's been a handful of firms that have followed. We have gone beyond that to receive a whole bunch of other approvals and access from regulators, including quite recently a conditional approval from the OCC, which is the federal bank regulator, for a national trust bank. And so being highly regulated isn't something that we just do because it's fun. We do it because we think that this is an important part of bringing this transformation, this replatforming more broadly across the whole financial system.
Understand. Do you guys do the crypto custody then, or because Mastercard's not doing custody, right? I've lost you there.
Yeah.
Okay, here we go.
Oh, sorry. So we do crypto custody ourselves. We've have our own custody solution that we built in-house and have been running for nearly a decade now.
So you guys today power PayPal, Venmo. Of course, we've seen others be, first movers in the space like Square and Robinhood. Twitter has just enabled Bitcoin tipping on the Twitter platform last week. So, there's some progress there. But, Ajit, do you want to dive into the whole digital asset space? What's been happening in that space lately?
Yeah. So I come from, so I work for Aave, and I'm in charge of building out our institutional capability. So Aave is one of the world's leading decentralized finance protocols, probably one of the best known. And so we are kind of at the bleeding edge of, first of all, what, everyone is calling the metaverse, which is, so metaverse is kind of a buzzword, but what I think we are really talking about is the convergence of, all of the technologies, whether it's AI, VR, AR, cloud, but also blockchain and crypto. And then the big idea there is that, unlike in Web 2, where, for example, if I publish a video on YouTube, then I don't own YouTube, right? I don't control YouTube as a creator. But we are looking to see how this technology can be used to move to creator-owned platforms, right? Where the creators through DAOs or other mechanisms, decentralized autonomous organizations or other token mechanisms can essentially control the platforms where we are distributing content. So that's the hottest thing. And that's kind of, we are doing a lot of work there. Then on the decentralized finance has grown quite rapidly over the last 2 years to up to 150 billion in total value logged. That's causing a lot of excitement, amongst users. We have been in The Economist, the Wall Street Journal, Bloomberg, you name it, as a community. But then we have also been getting a lot of interest from regulators and policymakers in DC, on both sides of the aisle, right? And there is quite a bit of action on the regulatory side with Mr. Gensler expressing his views quite, differently from the rest of the industry. Coinbase essentially going out on Twitter and expressing a difference of opinion with some of the regulators. There is just, and also the big infrastructure bill going out, which essentially doesn't necessarily recognize some of the unique characteristics of this technology. So I'll just, pivot the question, and non-fungible tokens, right? So NFTs and crypto gaming are really hot in the sense that, the pay-to-play model where you can play a video game and earn, a play-to-earn model where you can essentially play a computer game built on Ethereum and essentially earn through that by playing. That's pretty hot. Non-fungible tokens, digital art, essentially blockchain certified JPEGs, if you will, and video and music is really hot. So all of that innovation is happening at a breakneck speed. There has been extraordinary amount of venture capital coming into this space. I'm talking billions and billions. But here is the biggest question for me, right? And this is for both Paxos and Mastercard. Do we really think that the way regulation is going, does it take into account what can be done with this technology, right? At what point do we sort of stop replicating the infrastructure from, let's say, equity markets and debt markets and start to use the power of this technology to simplify and build better tools for compliance? And Walter, what are you seeing in that space, and Raj, you as well?
Yeah, I think it's a great question. I think that the answer is almost certainly that we're trying to apply old regulatory frameworks or existing regulatory frameworks to this new technology space ecosystem. And that, of course, is problematic, but it just takes time. I don't know necessarily what a better path is. Of course, for the sake of innovation, it would be great if it was just pure innovation and wasn't slowed by regulation. But of course, that's not the way these things develop. And so at Paxos, one of the things that we take as a responsibility, really, as as one of the most regulated players in the space, and given the types of firms that we serve, is to really spend a lot of time with regulators, educating policymakers, and making sure that we're a part of that conversation, so that when we get regulation, it's done thoughtfully. And so I think that that is something that I see across the ecosystem too, is a lot of players, even ones that are not heavily regulated with the same type of regulatory oversight that Paxos has, really trying to participate in that education. And I would say that is really one of the bullish signals for me, because that is what it's going to take. It's going to take a lot of time, a lot of education for us to get to the point where we have really thoughtful regulation that enables us to innovate and also protects consumers on one hand.
But I think that's part of the issue in terms of adoption, and particularly in the mainstream side, because you've got these leading crypto players that have been in the space for years now. You've got fintechs who, like PayPal, one of your clients, that have adopted crypto and included that. But a lot of the banks haven't got basic crypto asset classes. They don't allow you to invest in crypto. They don't allow you to hold crypto. And so that's sort of there's been these two parallel worlds, right? Ajit talks about DeFi and decentralized finance and all of these things. And a lot of players in crypto have got into crypto because they thought that it was a challenge to the existing banking system. But how much do we see this early adoption by players like PayPal and Square, and now influencing mainstream banks in the United States and Europe to get into the crypto space? Raj, do you have any thoughts on that? Or Walter after?
Yeah, maybe quickly. First of all, I agree with what Walter is saying in terms of the evolution on the regulatory side. More clarity is welcome. Coming back to this bridge question that you asked, I think what's happening here is all the crypto native players started launching wallets and services and providing, and then the next set of people who had the large digital distribution, like PayPal, like Square, started launching buy, sell, hold wallets, which is what you're seeing. And Brett, as you kind of indicated, I think the next click is many of the mainstream banks will get into the space in some capacity as well. You see some evidence of it. Bank of New York Mellon, for example, did something on the custody side. And you're also seeing some of the banks experimenting with some of the stable coins. I think they will get in. The way that we think about it is that we can play a very helpful role in bridging between the crypto world and the traditional finance world. In fact, one of the projects that we worked on, and which we will unpack this a little bit more later in the show, is really about bringing, for example, the stable coins to everyone who wants to use them, either as a currency, transaction currency, or even a settlement currency. If a consumer wants to spend their holdings, they could use that. If a merchant wants to get paid in a stable coin, for example, they could do that as well. What that does effectively is bridges the currency world, the digital currency world, into the mainstream, with millions and millions of merchants suddenly being able to get paid in the currency of their choice, and consumers are able to pay. And it's not just the merchants and consumers. I think it is extending the choice to the suppliers behind it. There is a bank involved behind the consumer, or a wallet involved behind the consumer. There's a bank involved behind the merchant. They're getting choice on how best to use, pay their obligations or receive their receivables in the digital currency. I think that that's a key building block in kind of bridging these worlds, and it provides scale. We are able to bring the crypto community the scale, the entire access to the Mastercard scale, but in a safe and simple way.
And Walter?
Yeah, I think that you hear this question a lot, like, is there a tension between these large players, these large existing financial services firms or technology firms creating access within their networks to cryptocurrency, blockchain, et cetera, such that people access, let's say, Bitcoin through a PayPal wallet, and versus this idea that blockchain and digital assets and crypto were meant to be an alternative system. And I really don't see the tension that same way. Paxos powers the buy, hold, and sell for PayPal, Venmo, We power the crypto buy, hold, and sell for Interactive Brokers, for Revolut in the United States, and for dozens of other firms that are onboarding onto the platform right now, such that we'll power a buy, hold, and sell experience inside some of the most trusted brands and trusted and most used products in the world for over 1 billion end users in 2022. And so that's huge access. And I think that what that says to me is that customers really trust and they enjoy using these products to be able to access things like cryptocurrency. And I think that when you say it doesn't really fulfill then its promise of being an alternative system, misses the fact that one of the great things about blockchain is access. And that allows an individual user like myself or you, Brett, to just go, and as long as you have access to the internet, you can access the network and you can access it directly. And you don't need to have membership of some sort of club or have some permission or some excessive fee. You get to access that. And so that becomes an option for everybody with the blockchain. But that doesn't mean that it becomes a better product or a better offering for some customers than going and accessing those products and digital assets through a product that they trust and use today. And that's where we're seeing enormous adoption through these trusted networks like PayPal, where the customers are saying, hey, we like this product. This is a trusted place where I can access these assets. Today, these are mostly closed loop kind of buy, hold, and sell experiences where you can just buy, hold, and sell, but you can't transfer it from the blockchain into your wallet or back onto the blockchain. But I can say that using the Paxos infrastructure, a lot of these firms, and frankly, I think all of them, are moving towards an open system where they can buy, hold, sell, and transfer on and off the blockchain. And Paxos powers that in a fully compliant way. So it makes it very easy to do that in a regulated, transparent, and trustworthy way for your customers. And I think that as that phase 2 of these offerings develops, people will really see that this is bringing all of the promise of blockchain, which is access, which is the global network. And just because some people choose to access it through another network, through another interface for a product maybe that is run by a centralized business, that does not mean that they're getting the full benefit of the blockchain or crypto ecosystem.
Absolutely. Well, just before we go to break, guys, there are a lot of, there are quite a few famous actors and people that have been pro-crypto. Of course, we remember John McAfee, he was big on crypto, but, probably one of the more mainstream actors is Bill Shatner from Star Trek. Big crypto guy, very bullish on crypto, engaged in the crypto community extensively. It's just been announced that William Shatner is going into space on Blue Origin next week. So maybe funded by crypto. Yeah. Ajit, you want to take us to break?
That's Jeff Bezos's ship. So if it was Elon Musk's ship, he might have been funded by Dogecoin, but you never say never. Anyway, so so I think one thing we have seen is even for DeFi increasingly, the distribution is going to come from centralized entities and regulated entities, right? So I think what Mastercard, PayPal, Paxos, and all of the centralized entities are doing is essentially distributing this incredibly beautiful technology and system of digital assets. And that's a really, really important story, right? How do you take decentralized production and combine it with centralized distribution? And decentralized distribution is a really hard problem. We'll talk more about that when we come back from the break. Really exciting times ahead.
Welcome back to Breaking Banks. I am your host, Brett King, and I'm joined by Ajit Tripathi, who's joining us from the EU. Where in the EU are you today?
I'm in London.
You're in London. You're in your home.
I'm in London. We are no longer Europe, Brett. In fact, I have to stand in long lines.
Well, yeah, technically. Right. Yes. Well, no, you Brexited, and that's why you didn't have any fuel or food at the moment.
Yeah. You couldn't buy fuel even with Bitcoin around here. It's been pretty bad. But anyways, moving on swiftly.
Absolutely. So, one of the things we hear a lot of talk about in the space right now, well, Walter, is stable coins. How do stable coins differ from things like Bitcoin and Ethereum, particularly?
Well, Bitcoin and Ethereum only ever exist on the blockchain, and they're natively digital assets. And the difference between that and a tokenized asset, or in this case, stablecoin, is that it is another asset that is represented on the blockchain and that maintains or intends to maintain a stable value pegged to that other asset.
So, for example, it could be a basket of currencies, it could be a US dollar, et cetera, right?
Yeah, the most popular stablecoins certainly today have been US dollar stablecoins, and that makes sense because it is the most popular currency in the world. I think I've heard that 80% of global transactions on one side of them are US dollars, and so the world likes to transact in dollars, and so as the cryptocurrency ecosystem grew even from the early days and people started to trade Bitcoin, and then at the advent of other types of popular cryptocurrencies, they wanted to trade those against US dollars. And so the original pull and much of the pull of stable coins today, and when I say pull, I mean because there's a demand for dollars to be represented on the blockchain, has come from traders and retail and institutions trading cryptocurrencies need to have a dollar on the blockchain so that they can trade in dollars but not be restricted to settling the dollar or fiat leg at the speed or with the restrictions of banking hours. And so stable coins have really grown. They've flourished. They've become, I would say, even though it's somewhat of a vanilla product when done well, it is one of the most exciting innovations in the space. And they've become a really important cornerstone of the whole cryptocurrency space. Paxos has been really involved in stablecoins from the beginning as an issuer. And what that means is we take US dollars, we hold them in the trust company, which means they're bankruptcy remote, fully segregated. We invest them in cash equivalents and hold them in cash. And for every one that we hold in reserve, we issue a stable coin or a token onto the blockchain. So now that dollar can move 24/7, very inexpensively, all over the world, with all of the properties of a cryptocurrency, except underneath you have a stable US dollar that's always redeemable one for one. And so that creates a lot of exciting potential. And I would say that we're just at the early days, even though stablecoin market cap's over $100 billion today and is growing at an unbelievable rate. We're really just at the early days of seeing how this new technology and how these assets are going to be used.
Now, just 2 days ago, just a couple of days ago, Jerome Powell was talking about cryptocurrencies, and we have seen that Washington is now talking about stable coins amongst top officials, particularly in terms of bringing federal oversight to digital assets. But Gensler at the Securities and Exchange Commission wasn't as bullish. He said that stable coins were like poker chips at a casino. And he said that the long-term viability of cryptocurrencies was questionable. Now, obviously, he's a very traditional guy, but on the same stage, we've got central bank digital currencies emerging like the yuan out of China. And China's clearly putting a huge amount of both regulatory effort and marketing effort and, logistics operations into acceptance of their central bank digital currency, which could be called a regulated stable coin in some ways, right? Or it's a digital fiat. But so these two sides of this coin, the Washington regulatory cabal who says there's no future in crypto, we're looking at stable coins, maybe we'll put some regulation in place to protect consumers. you've got a $2 trillion investment in crypto globally from individuals. You've got China banning crypto to support the CBDCs. Where does this all end up in a few years, Raj? Where do you think we'll be in 4 or 5 years of this?
Yeah, so this 4 or 5 years is a long time in crypto world.
A long time
Let me not try to predict, but what I think we can safely say is that we'll end up in a continuum. What that means is that you'll continue to have the Bitcoin and the Ether and few other currencies on the digitally or blockchain native currencies, as Walter talked about. You will have some form of stable coins. I think the key thing here really is about how they are regulated in each jurisdiction. That may vary. So you would see that continuously present, and you will have some form of bank deposits as well exist in the digital form. They're already in the digital form, but there is some early work happening there in terms of bringing them to the blockchain space. And then you will have central bank digital currencies, and like you gave an example of China. But again, all of these, as these different currencies come about, end of the day, it comes down to acceptance. I think you alluded to this as well. And how are these currencies accepted and used in every day? And that's where kind of networks like us can help us. For example, when Bahamas Sand Dollar got launched, we launched one of the very first cards. I think it is one of the world's first card, a CBDC-based card that provided access to central bank digital currencies in existing acceptance network using existing consumer experience, which is bringing the card to, a tap and pay at the point of sale. So what this brings is, first, from a central bank perspective, the utility for the currency is instant. If the currency is only useful as many places they're accepted in, and that's where that choice comes in. And the stable coins, the same thing. It's again comes down to choice, and which is what we provide through our global network. So I see variations of all of that, and that entire continuum existing in different forms, and which currencies exist in a given country. It really depends on the local regulatory framework that emerges out of that.
So, Walter, for you first, and for Raj, right? So it's amazing, or rather slightly concerning, how tied the crypto ecosystem and the value in the crypto market is to the US dollar and dollar equivalent instruments, right? So back in, I think I'm old enough to remember when all the crypto exchanges used to list BTC pairs, and all the decentralized exchanges used to list ETH pairs, like Ether Delta and so on. And now I think we've gotten from there to a point where after Tether started, of course, US dollar equivalent instruments have grown the crypto market from a few billion to I think 2.2 trillion as of this morning, and 2.5 trillion at max. So the growth has been enormous. But then I think now the crypto ecosystem feels a little bit at the mercy of the US dollar, and therefore the US regulators and institutions. So I see that Paxos have been doing a lot of work recently on USDP, and Paxos stablecoin is also supported in the Aave protocol. So I have quite a bit of experience working with the Paxos team on that. So where do you see, the risk is that a lot of this ecosystem could shrink quite significantly depending on the direction of US regulation, both securities law and banking rules that might apply to different types of stablecoins. Where do you see this going? And in terms of the growth of stablecoins going forward, and the overall impact on the crypto market that might arise from regulation of stablecoins?
It's a good question. I think that one of the challenges is that the US dollar is still the best global currency, right? It's not
not Bitcoin, Walter?
I think in reality it's not yet Bitcoin. I think it could be Bitcoin. It would be great if we get there, but today it's very volatile, and it just doesn't really serve that purpose yet. I think the adoption of the whole world to get familiar even with an entirely new denomination is a huge hurdle to overcome if it were to have all of the properties that would make it the best global currency. But as long as US dollar is the best global currency, then it's going to probably continue to be the, in the same type of demand that it is as we see in the crypto ecosystem today. And I think that that's not really what concerns me right now, because it is providing an incredible bridge from the broader market into the crypto ecosystem, right? These are familiar denominations. They're trusted backing with the US dollar, and they are being integrated into platforms like Mastercard that hundreds of millions, if not billions of people around the world already trust. So I would say, if you look at the cost versus the benefit, it's clearly a net benefit for me, what these tokenized dollars are doing for the crypto ecosystem. And I really think of them as an important gateway for the real mainstreamification of crypto assets, and more importantly, for the utility of crypto assets. So can we start to use these things as real payments? Can we start to use these things in the economy versus just an asset for speculation? And US dollar stablecoins are going to help us get there.
That's the big problem with Bitcoin, right? Bitcoin has not been a means of value exchange. The design flaw is that people want to hold it all the time, Ajit, right? So you could argue that for us to have a real global cryptocurrency, the main thing it needs is the fact that people want to use it to spend, which requires stability, right? It doesn't require speculation, right?
Yeah. I mean,
I think that's.
I'm slightly.
Let's ask Raj. Let's get Raj to jump in on this.
No. I was just going to just build on what you said, Red. And in fact, we think that stability is quite important, right? So if you look at from let's talk about there's the consumers on the spend side and the merchants on the receive side. What do the merchants want? Merchants want predictability of what their receivables are, and they definitely want access to that $2 trillion that Ajit talked about in terms of the consumer spend power. They definitely want access to that. So if you ask a merchant, do they want to accept Bitcoin, they would say, okay, it doesn't matter whether it's Bitcoin or not. I want consumers to be able to spend the assets that they have in my place. I want that spend power. So what we are looking at it is saying, and we want to do that in a way that the merchant, if you look at their liabilities are all in US dollars or other local currencies, and they want to be able predictability in how the receivables come in. So what we are looking to do here, and the work that we did with Paxos is actually a key building block for this, is that consumers get access to their wallets and the balances in their wallets through a card program, and the merchants get settlement choice through one of the currencies that they like today. We support dozens of currencies in which they get paid. We're looking to add stable coins to that mix as well. We've right now, with the work that we're doing with Paxos, we've enabled the choice for the wallet side. So Brett, you set up the question and asking how is the stablecoin a good vehicle here? And we really think that the crypto native world sitting in Bitcoins and Ether and other currencies, and they want predictability in terms of how they settle with the rest of the ecosystem. Stablecoins are providing that bridge today. That's really what we've done. And it is allowing them to execute that BTC to, let's say, USDP pair quickly in a 24/7 exchange that's available for them to sell with a player like Mastercard. And it's really about stability, and providing that stability at scale, requires currencies that can interoperate with the old and the new.
Now, Walter, you talked about the USD being the dominant global currency, but China is setting itself up for the 21st century to challenge that, in that they have the Belt and Road Initiative, which is their sort of core global infrastructure they're investing in. we see President Xi last week talking about the fact that they're not going to sponsor coal plants anymore, despite the fact that they're very reliant on coal still in China for a period of time. And so you look at the Belt and Road, you look at the central bank digital currency that China has launched successfully. What happens when they start to enforce the use of CBDC for trade, for example? You got to trade with China, you got to buy yuan to be able to do it. How might that affect the way we look at digital currencies versus the old greenback, which is essentially a 16th century technology, right?
Yeah, I think that's one way to look at it. I think there's another way to think about it, which makes a little bit of sense to me when I think of how these are going to develop and how they're going to compete with one another. If I think of them as like a global competition for digital currencies, and I do think that currencies, traditional fiat currencies, and certainly digital currencies have moral properties to them. And I think that there is kind of freedom certainly embedded in the currencies that we see, the native cryptocurrencies like Bitcoin and Ethereum, et cetera. And I think that exists also in the US dollar and creates some of the global demand and interest for the US dollar. And I think that although the Chinese have won the headlines in getting this product launched and a certain level of success, I don't think anyone would argue it's been a huge success, that ultimately it's going to be hard for the Chinese to create a winning global digital currency that is issued by the central bank, given the type of regime and the type of moral properties that would embed in that currency, versus something that is either natively digital, which is kind of the best example, or much more free currencies like US dollars.
Yeah, and actually, I think that the China, the pilot that's going on is very much domestic at the moment, right? That's another point, that's where the focus is. Yes, it could extend into their trade, but I would argue nothing stopping them from requiring settlement for trade happening in the in their cross-border transactions today in Chinese yuan, right? So there is nothing stopping them from doing in the traditional fiat side. I'm not sure CBDC version of it is any different. I think it's more of a policy question and an economic question on what is the best currency to settle for international trade. And I think that will play a bigger role than whether it is a CBDC or not, I think, in the short term at least.
Fair enough.
So I have a question on that, right? So where I've seen, Bitcoin, in summary, the challenge with crypto is that there isn't a lot of use of crypto, specifically Bitcoin, in the real economy, right? People aren't buying pizzas and paying for services with Bitcoin in the most parts. And merchants,
the good old Bitcoin
merchants don't necessarily want to accept Bitcoin, as Raj said. And I have personal experience working with Paxos payments product, but they do so where fiat is unstable, right? So I've seen that in Nigeria, I've seen that in a variety of emerging markets in the Far East, where the local currency is actually unstable, unlike the US dollar. Then there is quite a bit of acceptance of Bitcoin as an alternative, especially when the US dollar is not available. And if this digital Chinese yuan actually becomes available as a currency for foreign trade and for real economy in those countries, then it could really make a dent and really start to threaten the hegemony of the US dollar. But moving on from that quite quickly, I think the question is, right, in that, so there is a distinctive use case for crypto that doesn't depend on the US dollar. And therefore, there is a reason that I think crypto adds incremental value in addition to the assets we already have in the world today. So what's your philosophy with regards to integrating with the new Web3 infrastructure that's coming along with NFTs, right? Are we going to see Raj Mastercard on OpenSea for buying those wonderful, art blocks and CryptoPunks? And Walter, are you going to hold custody of CryptoPunks? Because this space is moving so fast, and are we going to see Axie Infinity integrated?
Well, you've got Walter, you've got USDP, right? Your own stablecoin, right?
Yeah. Well, I think to Aj's point, I think that the NFT world is fascinating at the moment, given what it is that everyone is so excited about, the actual collectibles that it is. But I think that underlying that, it's really a technology, a new way of owning things and buying things and sharing things on the internet that never existed before. And I think that we're only going to see that space grow at an unbelievable rate in ways that we really can't imagine right now. And NFTs, which are most easily identified today as these collectibles, these kind of digital pieces of art, are going to be used for the technology of a non-fungible token, are going to be used for all types of things like identity or information sharing on the blockchain. And I think it's going to be used in incredible ways in games, which is already happening at a really kind of fast rate, the innovation there. And so I do think we're just at the beginning. And if you ask me, do I think that the large firms that are using us today to access, buy, hold, and sell of native crypto, will they be integrating with NFTs and allowing access for their customers to buy, hold, transfer, send them in the not so distant future? I'd say absolutely. So that's going to come. And I think that, as far as our stablecoin USDP, I think that you're going to start to see just broadly across the board more use cases, whether it's buying NFTs or whether it is buying a cup of coffee in real life. And so I think that what we've focused on, which sets us up for success in this next wave of stablecoin growth, is we've focused on transparency and regulation. And what that means is our assets are actually explicitly approved by our regulator, the NYDFS, so that they oversee the issuance and they oversee the operations behind that stablecoin, which include things like managing of the reserve. And number two, the transparency. We've been very transparent that we take those the $14 billion today that we hold backing the stable coins that we have issued, and we invest them only in cash and cash equivalents. And that's something that our regulator has visibility and approval rights over what we do with those reserves. And so why that's important is because now that we're seeing the shift of these stable coins being used for just crypto trading and for things like DeFi into payments for goods and services, settlement into the Mastercard network, real types of traditional economic activity and payments, that is where that kind of extra level of oversight and extra level of regulatory transparency becomes really, really important. And what we're seeing now is firms like Mastercard create the infrastructure for what is going to usher in an entirely new level of utility and new ways these stable coins will be used. And I think it's a really, really exciting moment right now. And I think that 2022 is going to be a year where we see a huge shift of the way stable coins are used in the market.
Raj?
Yeah, quickly coming to Ajit's point, we very much believe in NFT and what the technology enables, especially on the creator side. And in fact, Mastercard is looking at we have a very well-respected brand, and we also have sponsorship relationship on the sports world across the world. So we believe in using NFTs as a rewards, if you will. We've launched the first NFT. There is a sweepstakes going on right now where we're creating NFT in partnership with Jose, a renowned football coach of Roma. That's just the start, right? So we're creating that NFT, and it's going to be available to the consumers, and We have a large priceless rewards platform. We look forward to using many of those assets out there and creating NFT as a rewards platform. That is one. And the second point that I want to make, building on what Walter talked about, this stablecoin enablement, just coming back to the main point, is the way we think about this is that look at our network. We have billions of cards, millions and millions of merchants working in an interoperable way and in a safe and secure manner. And by adding stable coins to our network, we're really becoming another CBDCs and other eligible cryptocurrencies to the network. What we're really doing is making our network as the layer 2 network, the most scalable, most secure layer 2 network for the blockchain network, right? So consumers can pay and get settled instantly and in a safe and secure manner. That's how we look at it. We can bring scale to the crypto world using the existing approaches that has worked in the industry for quite some time.
Thanks, Raj. Well, unfortunately, we've run out of time, but just before we go, where do people find out more about the Paxos Mastercard partnership, Walter?
Well, I think maybe the best thing to do is to Google Paxos Mastercard. You can visit the Paxos blog at paxos.com. And maybe most importantly, stay tuned for a lot of exciting new developments on that front. We're really excited to have had the opportunity and be partnered with Mastercard on this pilot and more broadly their journey into this space, which is so important both for Mastercard and also for the broader space.
All right, we'll also try and tweet out from the Mastercard newsroom in terms of the press release stuff there and so forth. But Raj, how do you think Mastercard customers, both end users of Mastercard and the banks and partners you have, are going to respond to this new sort of crypto custody capability that you guys have built as a result of Paxos?
Look, I think they're responding really well. We've launched a set of partners who are now settling every day through this arrangement today. So this has exceeded our expectations in terms of both the traffic and the ultimate demand. So there are more partners going to be added to this. Stay tuned for this. There are a lot more partners who want to take advantage of this approach. I think it is fast moving out of the pilot into more of a commercial offering, if you will. We look forward to working with Paxos and other partners out there to scale the solution and eventually bring the same level of choice to the merchant side as well.
Great. Well, Walter Hessert, Raj Dhamodharan, and Ajit Tripathi, my co-host, thanks for joining us on Breaking Banks and talking stablecoins, crypto, and crypto custody, and all of these things today. Have a great week.
Thank you.
That's it for this week. If you like the show, make sure to give us a 5-star rating on your favorite podcast platform, or share it with a friend, or share it on social media.
We'll see you again next week with more Breaking Banks.